Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Don't forget to subscribe, hit that like button, and share these videos with your friends. Thursday's action finished the month of April, and it was quite the month to say the least. The rebound that was experienced in prices was nothing short of spectacular. In fact, it was even unbelievable based on the backdrop of the fundamentals that we've been watching and will continue to watch as we go forward. The ugliness continued. We saw another 3.2 million file for unemployment, which brings the total over 30 million people. A source that I talked to today is saying there's another 14 million yet to come. So in spite of this, we've seen the market move up in this, and we've seen this disconnection between reality and what the markets have been doing. Over the past several weeks, I've continued to talk about the backdrop of the fundamentals that the market would ultimately have to face reality. It is likely over the next several weeks, as the country starts to open, the news that comes from that will cause some of that reality to become clear. I continue not to believe in the V-bottom. I discussed last night the Fibonacci patterns that have emerged out of the trading patterns, but that doesn't mean they're going to be satisfied. Most of the selling was institutional window dressing. There was no real material selling. We've seen a continuation overnight as the futures are down about 1.3%. That would total approximately 2.5% drop from Wednesday's close. So there's definitely some profit taking going on, and I've been discussing about how I believe this market can turn on a dime. One of the things on this channel that you will see as we walk forward is I'm constantly updating the analysis in a micro level, but the longer term perspective is always what's important. In tonight's technical section, I will go through some of the longer term aspects as we're coming into a new month. When I do my analysis, I look at a bottom-up viewpoint, which is daily charts, weekly charts, and the monthly charts, and I compile all of those trends together to come up with an answer. And what you see on the channel from day to day is trying to determine what the day-to-day noise is. Our short-term models are still long, but they have become very fragile. There is a hair trigger on an exit on the daily models at this time. As I mentioned in covering our quantitative database a couple of days ago, the aggressive short-term models have already started exiting. We've seen about a 15 to 20% exit of a lot of symbols model owned. We run mini portfolios on a multivariant model, which means we run all three models. We run secular, the intermediate, and the short term, which is the daily, weekly, and monthly charts. We saw a fair amount of selling in some of our key direct indexes that we run. Nothing has been material yet, but we're likely to see over the next week as the news starts to unfold, the country starts to open, we're going to have more to digest. And reality, as I've said before, will come into play, and we're likely to see the month of May go down and potentially retest some key levels below, which I also will talk about in the technical section. But as we sit here right now, we finished the month. We've got the Fed statement behind us. We know everything that's going on in the economy, which is terrible. Over 30 million unemployed right now. This is not going to get better very quickly, even though there are a lot of states beginning to open on May 1st. Around May 15th and at the end of the month, we're going to see more openings, but this is going to be a gradual process. It's not going to be like turning a light switch on and everything's going to start running again. We're going to have to see how society adapts. I've noticed just in the local area around here that people have become very active in the last several days, anxious to get back out and get to work, even though our state is technically still in restriction until May 15th. As we watch these states open and watch the news that comes out, it's likely to generate a fair amount of volatility. Let's take a look at the charts and start to look into the month of May, but look at how this week is likely to finish. As we start with the S&P tonight, we're going to start on the intermediate charts, and there's several things I want you to see here. PPMs down below here, PPM 1, 2, and 3 are all crossing their first derivatives at the same time. They're in perfect harmony, if you will. This is showing that the downward momentum is dissipating very quickly. In spite of the overnight weakness that we're seeing right now, these charts on an intermediate level they're continuing to be positive. I have the Fibonacci retracement sequence on the screen here, and it's still possible that we could see the S&P decline to minimum 2790, maybe down to 2650. There are numbers underneath the market now which are likely to support it, but the PPMs on the intermediate are turning. Looking at the monthly chart, we see that we were able to retrace just up to that 0.618 number, but one of the most significant things that happened on this chart was that we closed above the 21 period moving average. Now, you folks have been watching the channel for a while and maybe starting to get a feel for these PPMs, but the PPMs tell us about the angle of attack. And right now, on the left-hand side, PPM 1 is minus 0.10, which is basically a flat moving average. PPM 2 is a plus 0.16, and PPM 3 is a 0.62. We've managed to get back above the 40-month moving average and the 21-month moving average. If you'd asked me if we could have got over this level 3 weeks ago, I wouldn't have believed that this would be what happened. In fact, I thought it would stay under the 40-month moving average, which was at 2734. Now we're going to see some backfilling on these charts here, but the long-term charts are still positive. There's actually, on a long-term monthly chart, we're still in an uptrend. The positive PPM 3 suggests that with a 0.62 angle, 2792 to the 2734 level is going to be major support. Let's review some of the analysis that I talked about last night. First of all, the daily model is still long back from 326. This trend continues to move higher. We have PPM 1 over on the left, 0.40, PPM 2, 0.57, and then PPM 3 is still negative. So this configuration tells us that there is still a positive trend under this market. It will take a close below 2836 today to signal a negative tone as we come into the next week. But this configuration overall is still bullish, even though short term we're going to see some selling come in. The only thing that will negate the short-term downtrend will be a close above 2912 today, otherwise a higher close. But the point I want to make here is that the long-term trends are still up. The market was able to get above some of the key moving averages. That configuration suggests there is hope this country is going to turn around, is what it's telling us. At least that's what market participants are pricing in. If you haven't subscribed, please do, so we can keep this channel growing, so we can bring some absolute amazing things to you guys as time goes on. Thanks again for watching. Talk to you on Sunday night.